for us. Susan.
Yeah, there's a lot of negative, a lot of positive in this report card. I think Wall Street just wants to take the positive right now. So you're up 4%. As you mentioned, we did see the first sequential, meaning quarter-on-quarter decline in a year. You had profit missing slightly. Actually, profit came in better. Sales missed slightly, and it's a gross margins. And why do we care about automotive gross margins? Well, it tells you how high the costs are, especially for Tesla. And Elon Musk is trying to bring on Giga Berlin, also the Austin factory, which will make the Cybertruck in the future, and he's called them money-burning furnaces, and he's spending billions of dollars right now not producing enough cars, and it's not ramping fast enough to get the supply onto the market. So as you mentioned, we did see that closure in Shanghai, which really hurt production. They've only produced about 600,000 cars, Neil, in the first half of this year, and we're still waiting for that conference call, that earnings call to start at 5:30. Will Elon Musk be on it? He says he's not going to be on every quarter, but it'll be interesting. Of course, he'll be asked about Twitter as well. But the reason I'm bringing that up is because 600,000 cars in the first half of this year, Neil, and Tesla is still guiding for 1.4 to 1.5 million vehicles to be made this year. They're going to have a stellar back half of this year, the last 6 months, in order to get to that guidance.
You know, Susan, what's remarkable, and great overview of that, I appreciate it.
Thank you.
It's been a rough week for the world's richest man. Yeah. If you think about it, the Twitter battle notwithstanding, of course, a Delaware court judge saying we're going to have, this court case litigated in October. We're going to speed it, which is what Twitter wanted. Then, of course, these troubles with foreign and Asian production. Yeah. It's been rough.
Well, here's the thing. Also, the reason we're talking about Tesla is the fact that he had to sell around $10 billion last year in Tesla stock, $4 billion more this year in order to raise that cash for that $44 billion Twitter bid. But yes, he did lose that first round in that Twitter trial in the Delaware courts. It's going to be an expedited 5-day trial in October. But some say, look, if he gets to walk away from buying Twitter, he has to pay a few $1 billion in damages, maybe even that $1 billion breakup fee. That's actually a plus for him because he'll have extra cash all of a sudden with the selling of $10 billion worth of Tesla stock last year, just in case for this possible $44 billion deal. Now, also, there's been an overhang on the stock, as you know, Neil, about $100 billion or so roughly around $100 per share because of the unknowns of this Twitter deal, because eventually he's going to have to sell more Tesla stock to possibly raise more cash or put it up as collateral for more loans in order to complete that purchase.
Yeah, I've always wondered, Susan, whether that was the reason, the collapse in that stock. Of course, with a lot of other technology stocks, the currency for his deal might have had some role in him walking back from this deal. We'll never know, but we'll see.
Well, here's one thing. Tesla stock is down 30% this year, Neil. If we see the first, we might see, and likely, the first stock decline in Tesla since 2016. And some say, well, if you didn't launch this Twitter bid, we wouldn't be here, but you never know.
You never know. And he could say, well, look what's happening to all these other technology companies, but wild stuff. Susan, great reporting as usual. Susan Lee, our star over on Fox Business Network.